If you're brand new to trading options and you want to know what's the number one trading strategy to start with if you have a small account, then this is the one I'm going to share with you in this video. Now, the thing with options trading and people always trying to get started, they're always looking for a fancy strategy or something a little bit more difficult or complex. And it might be an iron condor, it might be a butterfly, a double diagonal. There's a lot of strategies out there and you might have dug yourself into those areas and you might have even tried trading some of those and they might have not worked out. And if you've got a small account, if you're new to trading or you haven't made something work yet, there's one strategy that I find works pretty well depending on your knowledge and ability to really understand the concept. So again, number one could depend on number one in what way. And number one, when people ask me, what's the number one strategy? Number one, what? In capital efficiency. Number one, in terms of easy to understand and do the process and the procedure. So there is a fine line and difference. So in this video, I'm going to share with you the number one strategy that I think that's number one, simplest to execute and profitable to understand and have a clear cut process to actually doing it. So all of those things line up, which allows you to be more profitable. And it's really efficient capital wise for a small account. So let's take a quick peek. Now, if you're brand new here, my name's Sasha, the options coach, and I've been teaching people to trade options for over the last decade. Now, one of those strategies that we've talked about in our classes is this 50-50 coin flip strategy. It's also the at the money vertical spread. It's a debit spread. And we've done a lot of different classes, but I find over time, what happens is that this strategy right here is the one that people gravitate to because it's really simple to understand. It's capital efficient. And even if you're brand new, you can kind of get it as long as you understand some of the basics behind options. Now, if you're totally brand new, you might want to go into more of the wheel strategy or understanding covered calls and some of the basics behind that. But if you kind of got a few things down, a few verticals, this is kind of the one to go with. Now, if you have some interest in some of the classes we have, then by all means, reach out to me on our website. Let me know, and we'll hook you up with some good goodies and other good stuff. But in order to show you what this strategy is kind of all about, the at the money vertical strategy, when you go in and do this strategy, you're basically risking one to make one. So let's go in and do a quick little breakdown. So in a lot of cases, when you're doing an iron condor or you're doing any other fancy strategy, what's going to happen is those are a little bit more of a beast. It's like a four-legged beast. And when it goes in, you might risk, let's say, $600 to make a very small amount of profit. So your profit, let's say, is $100, but you're over here risking $600. So the risk to reward is not that great. Not to mention now you have risks on both sides. So you can get burned if the stock jumps up or if it gaps down. It kind of has to stay a little bit more neutral. You've also got other strategies where you've got kind of like this double diagonal, but this gets more confusing and more complicated because now what you've got is you've got a difference in expirations and you've got a variation in strikes. So this can be a little too complex. Again, I'm not saying these strategies are bad, right? I'm not knocking on the iron condor or these because I do think they're great strategies. They're just not always the best for beginners or people starting out. They're a little bit more complicated to deal with or to manage. Even a butterfly spread gets a little confusing sometimes because you have kind of two contracts right here at the center. And now you've got a little bit more of a complex trade to manage if it starts going against you. So again, these are all great strategies, but for beginners, for new people, a simple clear-cut process is the easiest way to go. So what an at-the-money vertical does is where we go from here is we might risk, let's say, $100 to make $100. So this is where the coin flip concept kind of comes into play because the price is here. And when you start with the price here, you might actually risk 100 to make 100. And if it comes into this level or zone, this is where you actually end up profiting and taking some profits. But if it doesn't get there, you lose the full 100. You know, you can also get out a bit early. Maybe you lose only $40. But up here, you know, as long as you're playing a game of chicken in a way, in the next 30 days, okay, if in 30 days, it expires fully versus a 1 day, it's somewhere up here. That's all you're looking for. And then you're looking to get out. So that's what the beauty behind these at the money vertical spreads is that you're risking one to make one. And that's really the power behind them. And, you know, you can construct them bullish. Like over here, you could construct them bearish. But the point is you risk 500 to make 500. Okay. Or you could risk 250 to make 250. and you can always get out early. So I'll show you a couple of constructions here from class this last week, and just to give you a little idea. So here's QCOM, and QCOM is not working in our favor. We're down about $7, but what you'll see here is that this trade is going a little bit against us, but look, we're risking, I just want to show you the risk, $45. That's it, $45. And that's why I say it's capital efficient if you're new, if you're trying to get started in trading, if you have a small account, to try to make 55. So risking 45 to make 55, risk 1 to make 1. And it's going against us. And if you lose the full 45, you lose the full 45. Now, I could get out of it a little early. Maybe I lose only 15. But again, that's a whole different ball game. This is something we get into the classes of how to manage these trades. But the point is you're risking 1 to make 1, roughly. That is kind of what you're doing. Let's look at a maybe Wells Fargo trade right here. This one's a little bullish, okay? So here, this one we're making or looking to risk 51 to possibly make 49. So again, risk 50 to make 50. And if it goes up a little bit, look, we can always get out of it early. Like right now, it's up $6. Now, it's not a fully accurate profit and loss because the market's a little bit closed right now. But just to show you, even on a $50 trade, $51, look, you make $6 on $51, 11%. You know, people look at it, it's only $6. Yeah. But think percentage. Think percentage, because 11% on $500 is also, starts getting bigger and bigger. So that's what I want you to think about, is look at the mechanics, okay? Because if you go now into $5,000 and you make 11%, now you start really adding things up. My point is here, you can do small trades if you got a small account. Right here, you're starting to build momentum. $50, you make $6 or $10. Yeah, it works, right? And the beauty behind these trades is even if it goes max loss, you risk only $50. So it allows you to kind of get into the game, get your feet wet, get your hands dirty, and allows you to kind of play with it. Let's take a look at maybe DKNG right here. That one's up $35. I'm not sure how accurate it is right now. So yeah, it's a little bit not accurately priced, but the point is we're risking 1 to make 1. So I find these strategies work out really well for trades that are, if you're new to trading, if you're just getting started, if you want to make sure your risk is under control, if you don't want to watch the trades because you could come back and see if it touches that zone or somewhere, or if it's above, and you could give it 20, 30 days to let it sit. So if you look at all of these trades that I have, some of them are shorter duration, like 4 days, some are 22, 29, 36, 43. So you could really throw in a mix of different trades in there and trade a duration that you really like and enjoy. So anyway, my point here is that these are really nice, simple, clean-cut strategies. The at-the-money vertical. If compared to an iron condor, if you're doing like things like a butterfly, iron condor, double diagonals, those trades are more complex, and they're great if you're got some experience under your belt and you've got some management and you've got some additional tools under your toolbox. That's fine. But if you're brand new, if you're getting started, if you want to be capital efficient, if you want to have a simple process, the at the money vertical is really nice because, well, what happens is that, well, if it goes up, great. You get some positive theta in that area and it slowly decays. If it goes down, you start losing some theta and you kind of need it to go back up. Otherwise, it's a coin flip. Risk 50 to make 50, risk 100 to make 100. And it makes it really nice in that regard. Now you can increase your odds and your probabilities or chance of success. Well, how do you increase the 50-50 odds? Well, let's say stocks are down, or this JP Morgan is down a lot. Well, if it's down a lot, you could look for it to snap back up. That increases your odds, right? So if you put on, like, say, a bullish trade over here, well, you might get a snap up. And after a bunch of up days, if you put on a bearish trade, you might get a down move. So all of these little things add up to your chance of success or your probabilities being a little bit higher and better. Anyways, this is one of the things we've covered in our latest class. Truly appreciate you joining me in the video. If you'd like more information on the classes, shoot me a message, book a little call, phone call, send me a text message if you like, and I'll give you more details about all these things because we've got a ton of different classes that we do every single week right now, or multiple classes every month. Anyways, thanks for joining me. Truly appreciate it. Hope to see you in the next video. Take care.